Hello and welcome to the Global View on this Wednesday. I'm Andrew Gagan. Great to have you with us here at ausbiz. So, plenty going on, of course. Let's take a look at what happened overnight. Risk appetite increasing ahead of the first results from the US election, with global equities rising along with Treasury yields. On Wall Street, the VIX volatility index fell more than 6%, and that's despite that uncertainty about the election outcome. In fact, the latest polling suggesting it could be days before results are finalised. US stocks rallying on data showing further signs of a solid economy there. And the so-called Trump trade, or stocks viewed as proxies on a win for the former president, surged on election day. The shares of Trump Media and Technology Group jumping. That was previous. And crypto stocks tracked Bitcoin higher, with the Trump White House seen as bullish for digital assets. The Mag 7 rising, led by Tesla and Nvidia. And Palantir's shares soared to a record high after the data analytics firm raised its annual revenue forecast for the third time. Meanwhile, shares of Boeing fell after its West Coast factory workers accepted a new pay deal, ending a 7-week strike that halted jet production and deepened a financial crisis at the aircraft manufacturer. And Yum Brands reported an unexpected fall in worldwide same-store sales as its KFC chain grapples with sluggish demand in the US as well as choppy international sales. Well, US services sector activity unexpectedly accelerated in October to a more than 2-year high. The ISM Non-Manufacturing Purchasing Managers Index rose to 56 last month, with a reading above 50, indicating expansion, while employment also strengthened. US Treasury yields have risen as online prediction markets again favour Donald Trump as most likely to win the presidency over Kamala Harris. The 10-year yield gaining almost 5 basis points to 4.35%, and the 2-year up a similar margin to 4.22%. The US dollar did fall as voters headed to the polls, and the Aussie trading at 66.4 US cents. In terms of commodities, oil prices climbing as the US dollar weakened, and with a storm expected to impact US output in the Gulf of Mexico. Brent crude futures up more than 0.5% at $75 a barrel. Copper up almost 1%. Iron ore rising 1.5% to $106 US a tonne. And gold has steadied as traders await the election results. Gold futures close to $2,750 an ounce. And Bitcoin has surged on bets of a Trump victory. It's around $69,500 US. All right, so let's unpack what we're seeing in the States with polls just about to close on the East Coast. John Blank is joining us from Zacks Investment Research. John, happy election day to you. What are your thoughts? Look, the opinion polls, impossible to know what the outcome is going to be here. Do you feel as though this is going to take quite some time before we get a definitive result?
Andrew, I will tell you that you're looking at a situation where there's two strategies in place here. The Republican strategy, which is a top-down strategy to flood the zone with misinformation and bogus polls. We've had 100 polls put out just on Sunday alone from the right-wing side. So the basic strategy on the right-wing side of the country is to flood the zone. Flood the zone with information, make it look tight, keep everyone glued to their screen. The story that's probably not getting broadcast to Australian viewers and the media more generally outside the United States is the bottom-up strategy of the Democratic Party. Big donor participation and huge grassroots support, knocking on doors multiple times in all of the swing states. For example, in California, people are flooding out of California into Arizona and Nevada. They've done it for the last 2 weekends. And we're seeing it already in the early exit polls. Lots of women outnumbering men, voting, which is basically, the abortion verdict. They are irate about that whole issue, and they're coming out in droves. So I will tell you that the surprise will be that we're going to get record turnout in most of the swing states, led by women, and they're going to surprise to the upside with a Democratic swing state victory. So I won't tell you it's close at all. I think your 60% base case, Andrew, should be that it's not close at all. 20% is that it is close, and that Democrats still win, which is what basically if you read the good polls, 9 of 10 says, and then 20% is going to be some type of situation that will be very contested, very litigious, and go on for weeks, kind of like the Gore election in 2000. That would be my personal, setup right now as I look at what I see in the country.
Okay, so John, if that scenario transpires as Kamala Harris most likely to take the White House, of course it also remains to be seen what happens in Congress.
Right.
How are markets likely to react to that, given the positioning they've had in the lead up to the election?
Andrew, I think this market is pretty satisfied for the next year that the momentum that's been showing in the strength of the U.S. economy is just going to play out. And I don't think, from a deep structural perspective, this market is pricing in beyond that. So I expect the market to kind of look through the election result, not have it too much concern. We saw it today with the VIX dropping and stocks rising. It's just kind of a relief to get this out of the way, get this out of the mainstream media, get this out of the constant texting for donations that we're all getting up here. We're just all getting relieved, Andrew, to get it over. And behind that is a strong economy. We've got 2.3% for the Q4 number for GDP growth. We had 2.8 in the third quarter. I just did all the professional forecasting surveys for 2025. There's no sign of a recession. So people are going to stay with what's going on for at least the next year, and I think you're going to see a strong start.
Now, of course, this comes ahead of the Fed policy decision later this week. Is the policy setting committee going to be mindful of potential outcomes here for the election, which could influence their decisions?
Andrew, I think the answer is if we get to 20% of a very contested election, throwing this, into litigation and multiple weeks, yes, they will care. However, I looked at the CME Fed Fund futures for the November meeting. I've got 95 to 98%, 25 basis points cut. So there's basically not any thinking on the part of the Federal Reserve or the traders that there's going to be anything but, what everyone thinks they're going to do is 25 in November and 25 in December. And again, I think that should be the base case, that basically we get this put behind us. The election's not contested, and the Fed stays happily on its course with a 25 basis point cut in a couple of days.
All right. So, from an investor perspective, then, what's the positioning? You wait for the outcome there of the election and perhaps stay the course?
Andrew, I think first of all, we've got half the early voting to tally, and then we get the other half that shows up on election day to come out, and they're going to be very, very careful because of all the misinformation and the 2020 story that led to such chaos. So I do think it's going to take till the end of the day on tomorrow for us to really get a good appraisal of what's going on. So I think being patient for a day or two is the right strategy. Let the system work. There's really nothing to be gained in trading in advance of that. And then after that period of time, I think we're going to be basically back to business as usual. So I would just put a pause on and enjoy the theater of what's going to happen here for the next day or two, and not expect to be the first person out the gate, the big insight. That's probably not going to be tradable in this context.
All right. Enjoy the theatre then. Great way of putting it. All right, John. So meanwhile, worthwhile, of course, keeping your eye on investment opportunities. You do that. You've brought another 3 stocks to us. Let's just quickly get through those then, perhaps beyond the election, of course. The first one, DBS Group, the foreign bank.
Yeah, DBS Group, Andrew, largest bank and stock on the Singapore Stock Exchange. This company makes $11.50 a share, and you can pick it up for $120 a share. You can do the math there. That's an 11p or even less. So this is an incredibly good stock for an income investor, particularly because I've got a 5.4% annual dividend. So if you're looking for a really strong bank in the Asia Pacific that has our estimate vision going up, which means they really are in the right place for that region and are collecting the profits to show for it, then you got to look into DBS Bank. It's a good stock and it's a good price.
All right. Another one that we be familiar with is Moody's, the credit ratings agency. Why are you looking at this one?
Yeah, Andrew, this one I've got a $462 share price. $462. Our target price is 552. But what's interesting about this, we just talked about DBS being 1150 a share in earnings. I get $13 a share in earnings for this company. That's only $1.50 more than DBS. So basically, that's 10% more than DBS. So if DBS is trading at 120 and 10% more of that, that would be $130, $140 a share. This is $462 a share. It's bonkers. So I've got a 38 PE ratio on this stock. I simply cannot make the math work. And this is just showing you that in some parts of the U.S. economy, momentum trading has gotten out of hand. Obviously, there's estimate revisions pushing this up. They are strong. It is a strong stock from that perspective. But, I get nosebleed when I see a 38 PE in a financial stock like this.
Yeah. Oh, indeed. All right. Third one. Now, I haven't come across this stock before. Amphenol.
Right, ticker APH. This is a really good tech stock to know about. I've got it at a 37 PE, however. But, again, if you're looking for a higher beta stock, it's a 1.2 beta stock. If you believe the tech stocks are going to rally, I see nothing but green arrows on the estimate revisions going back 5 years on this. What they do is sensors, Andrew. So sensors are in everything now, cars, appliances, everything. So this is a great trade for a dominant stock and a dominant space in the tech business. And if you get any pullback at all out of the tech business, you got to like APH. So APH is a name I would like on a pullback. I don't necessarily like it now at 37 times earnings.
John, terrific you bring those three stocks to us. And also for your election analysis, enjoy the results as they come in. Hopefully, of course, it's sooner rather than later. Thanks for joining us from Zacks.
Ben Andrew.
All right, let's take a look at where we're likely to get going locally and looking for a positive start here. That's off the back of some momentum we've seen on global markets overnight. So SPY futures up almost 0.7%. Stay with us because the open is just a couple of minutes away.